rookie investors, or maybe not sometimes, maybe a veteran investor gets a little bit cocky and you forget about the implications of cash flow.
If you're not keeping your finger on the pulse and you've been investing for so many years, this market's completely different than where you would have invested 5 years ago.
100%.
So if you don't have someone telling you exactly which areas are ripe for investment, where rents are actually holding up, then you're gonna get burnt.
Welcome to episode 361 of the Real Estate Podcast, where Shehri and I talk about the ripple effect of dropping rents. Enjoy.
Welcome to the Real Estate Podcast, your go-to source for raw, unfiltered stories and expert tips. Whether you're a buyer, seller, tenant, landlord, or realtor, join us as we dive into the world of real estate.
I'm thinking in my head, did Jen catch everything? Buyer, seller, tenant, landlord, investor?
I was actually thinking the exact same thing.
Yeah.
I was like, did she say investor? I
think she did right at the end.
Okay.
I hope so. If not, they have to add it after what we're going to talk about.
Exactly. Yeah.
How's things, man?
Good, man. I got to say before we start, I love the beard. And I'm so happy that, I guess me, you, and Adrian, we all have beards now.
It's actually funny you say that on two fronts. You were my go-to. You were like actually two go-tos. Yeah. So as you know, as people maybe know, I'm a huge fan of the Milton Menace. Huge fan. Last year, my way of supporting was growing the playoff beard like the players do. And I'd never grown a kind of a full-on beard before. And I remember asking you, like, what do you do?
What kind of products do you use?
Right. Yeah. And I don't use product now, but I actually go to somebody once every 3 weeks. Jay, my guy, shout out Men's Zone Milton, Jay. Nice. He does a great job, and I'm happy. Like first thing I do is go in my car and I look at it and I'm like, oh, but it's funny you bring that up now. I said to Erin, my wife, I said, is it maybe time to get rid of it? And she's like, no, I kind of like it now. And before, she was the one, as long as you keep it well groomed.
Yeah, so, exactly. I think that's the hardest part, and that's why a lot of men don't want to grow it out, because it's the grooming. Yeah. But you go to any barber, they'll charge you $10 to $15 and they'll line it up for you. And,
oh my gosh, she does a great job. And it's fun chat too. So
yeah, exactly.
Yeah, thanks. For more grooming tips, tune every
Yes, that's what Jen forgot to add.
That's right. Yeah,
grooming.
That's awesome. Yeah. What do you want to talk about?
We're talking about rents today. Talking about rents coming down, what that means for renters, tenants, landlords, investors, everyone.
It's a pertinent topic, I think. Like on the news every month, I mean, the interest rates, I think by the time this airs, it'll be, maybe 2-3 weeks that the interest rates were just reduced. And we always hear about the housing market, homes, but rentals are big. Like they're a very, very big component, especially with people first moving out onto their own because they're having challenges getting into the housing market. So what do? When they want their independence? They want to rent. And I think over the last year, you probably have numbers knowing you, we've started to see things come down pretty significantly. Whereas, my first 4 or 5 years in real estate, it was ridiculous. And even now I would throw out there like what people are paying for a full home. It's bananas. Yeah.
And even though rents have come down, and this is the 10th straight month that they've been coming down year over year.
There's the numbers.
Yeah, there you go. They're still sky high. There's no doubt about it that they're still much higher. I read over the last 5 years, we're still up 16%. And just being down
over the last 5 years?
5, I believe. Yeah.
Interesting.
So seeing them come down 2 to 3% year over year, every month. I mean, it's helpful to renters, but it's still not what's making living affordable per se.
I was going to say that as much as I don't know if, and this is my knee jerk or my gut thought on that, is 2 to 3% significant enough for a person, or is like, yes, it's encouraging, but what I find more encouraging for people is the overall trend. Okay, so seeing that trend is actually occurring as opposed to going up, as opposed to 2 or 3%, like $20-$40 on $1,000. I mean, that translates into, I guess maybe, I just did a home for somebody, 4-bedroom home, and we paid, I think, $3,900 in Milton. So it kind of adds up, I guess. Yeah. But to your point, it's still a lot of money.
Yeah. And, I would say it does not really make things any more affordable, that $20, $30, $40 extra every month. But, and we'll get into this, it does impact the way investors think. So to them, they're obviously watching every dollar that's coming into their pocket or leaving their pocket. So to them, 20, 30, 40 bucks could mean the difference between, hey, this isn't even worth it for me anymore, if it already was getting close to that point.
And I mean, this is 3 steps ahead that I know we'll get to, but it triggers action, right? Like it's not just kind of looking at your P&L anymore. It's all of a sudden, oh shit, I didn't get into investing in properties to lose money. Yeah. Something I have preached from day one, being in real estate, and it speaks so true to investors as well. Know your numbers, okay? But you can't look at it as a snapshot. I mean, you have to do, we used to call these sensitivity analysis, okay? I'm sure you're familiar with that as well. If the market does this, this is what happens. If the market does that, this is what happens.
Exactly.
And speaking specific to investors, I think the condo market in Toronto is a perfect example. You know, when interest rates were what they were, my gosh, this is free money, you know, and it was inversely related to what rents were doing.
Yep.
Okay. Rents were going up. Now all of a sudden there's so much bloody inventory. People are stuck with these properties and they're losing money, as opposed to if they would have run their numbers properly or got into a situation where they could have hedged against this type of thing happening, maybe we wouldn't be in such a bad problem right now.
Exactly. And then it's interesting now because usually when you see property prices you see property prices go up, it's usually inversely correlated to renting. But now you're seeing both markets come down. And then why that's important for investors is because people who invested in the market over the last 5 years are seeing a downtrend in their equity now, along with the cash flow they're getting every month, right? Yeah. So that's what's really pressing them. Yep. And now if they were to sell, they would be taking a loss on the capital appreciation. And they've been eating a lot of rental costs or a lot of cash flow costs over the last few months too. So definitely something to think about as an investor right now.
And it's interesting. I mean, I made some notes, obviously, before we were chatting about this, probably half a dozen times in my notes as I was kind of reading on various subjects in this topic was cash flow. And I think, you know, rookie investors, or maybe not sometimes, maybe, you know, a veteran investor gets a little bit cocky and you forget about the implications of cash flow. You know, you can make a P&L look as pretty as you want, but at the end of the day, you got to pay for shit. You got to pay for your mortgage. You got to pay for your investment. Cash is king.
Yeah, 100%.
You don't have that cash, things go sideways pretty quick.
Yep. And if your primary source of income is not investing or real estate, you need a trusted advisor to tell you about which markets to stay away from. If you're not keeping your finger on the pulse and you've been investing for so many years, this market's completely different than where you would have invested 5 years ago.
100%. So
if you don't have someone telling you exactly which areas are ripe for investment, where rents are actually holding up, because there are those little pockets where rents are still holding up. Absolutely. Or those home types where rents are still holding up, then you're gonna get burnt, right? So
all I heard was trusted advisor. I'm so excited that you used that in a sense. We were talking about that before. And it's an important term because, I mean, I would say we're in the know. Okay. We do a lot of rentals representing both landlords and tenants in the market along with, you know, commercial. We also do buying and selling homes. So we're very intimate with this kind of stuff. So I like to think of us as trusted advisors, as opposed to, you know, this salesperson that's just trying to get a transaction done. Because you need that right now. I mean, by the time you're watching the news, you've missed it by 6-8 weeks.
Exactly.
In my opinion, as opposed to getting relevant data. And really interesting that you brought up segments of the same market. I mean, it's kind of twofold, you know, homes versus condos versus townhomes, not just in one area, but even within a region. You know, Milton to Burlington, Milton neighborhoods to Burlington neighborhoods can have very, very different implications if you're not in the know, for sure, especially if you're looking to invest in a property.
Yeah, so it's interesting that you say that too, because I've done a bunch of rentals this year on the leasing side and on the tenant side, but specifically for the leasing side, there's this one building I help out with primarily in Milton. It's in a great location and never have an issue, no matter what time of year. As long as you price it reasonably, it gets rented out within a couple weeks. But then there's other rentals where, you know, there might be 10 other rentals in that building. It doesn't show the best and it's in a different part of Milton that isn't as accessible for walking. you're going to be sitting for at least a month, which is something you have to talk to with your investor about. Like, hey, you got to consider vacancy costs if you go into this specific investment.
Yeah. Vacancy cost is significant. And, as you know, I do a bit of commercial. That's something that you have to consider. Like, you have to, as an investor, it's a very different mindset, whether it's residential, whether it's commercial, very different mindset of what you have to look at. Okay. As opposed to just owning a property. You have to look at specific line items, and something a lot of people forget is vacancy rates. If you're running hand to mouth on a property, you should factor in. I mean, I don't know if you remember our training in school when you're looking at, analyzing properties, rental income or rental properties, for example, 3 to 5% every year. You should factor that in to a vacancy rate.
Yep.
Okay. And if you're lucky enough to have your property tenanted all the time, it's a buffer. Okay, that's just good management of cash.
Exactly. Yeah, and that way you can sleep at night with your investment. I've talked to so many landlords who just have horror stories about investments they got into, and I could already tell they did not have the best insight into the market or have the trusted advisor we were talking about. Yeah. These are things you got to think about before you get into that.
And I think too, we deal with a lot of people that very smart people, but you have to be humble enough to take the advice, like myself. And I've never been in a listing presentation with you, but you and I have had enough conversations. I'm very data driven. Okay. Because in my opinion, numbers don't lie.
Yep.
Okay. So if you can present a strong case to support a thought or an argument that you want to make, here's the numbers. Okay. Know your numbers, factor your situation into these numbers. If it still makes sense, okay, we'll go on to the next part of the conversation. I'm having to do that a lot, kind of the consulting part with commercial, okay, with people. First time getting into a commercial space or leasing or moving up from your existing space. There's a lot, especially entrepreneurs. There's a lot of people that don't know what they don't know. And I think there's real value if ourselves as trusted advisors can play devil's advocate.
Yep.
It's tricky conversations sometimes, especially when they haven't factored things in that might change their whole plans.
Yep.
But at least it's done in a safe environment, as opposed to you're 3 months into a lease and you realize, oh shit, I can't pay for this anymore.
Yep, exactly.
So
exactly.
pretty important.
Yeah. So we've talked a little bit about investors. Let's talk about a little bit why rents are dropping the way they are. So what are you seeing in terms of the reasoning behind this shift?
To be honest with you, I think supply obviously drives prices, in what we do. So that would be number one, but also expectations, okay, of landlords, for example. And we see this buying and selling properties as well. People are still stuck in 2-3 years ago where their expectations are up here. Well, that's a very dangerous game to start playing when you've got competition, you've got inventory, because homes are going to sit, okay? Properties are going to sit. And I think we're seeing that more than we have in the past. People realize now that they have choice, or they've come to the realization that, I'm going to suck it up for another year. I'm going to save a little bit more money, and I'm not going to jump at this. Okay. So the fact that, people are a little bit more hesitant to jump into something for the fear of missing out, is creating this imbalance now in favor of supply, whereas before it was all about demand.
Yep.
Okay. So I think that's providing a bit of an anchor to bring some of the prices down. For sure.
Supply is huge right now. And then with all the condos that were being built in 2020, 2021 are finally finishing or being completed. And that's increasing the supply, especially in areas like downtown Toronto, which is one of the biggest markets that saw the drop. Yeah. On top of that, so what I'm seeing a lot of is the effects of less immigration coming to Canada. Though when you immigrate to a country, you normally end up what do? You rent, right? Before you get into the market, you save up some money. And since that's drying up, that's also leading to prices coming down as well. So it's kind of like the perfect storm for prices to slowly come down. Yeah. And a lot of banks think that that's where, or like RBC, for example, just had a report that said they see this trend going for the next little while.
Yeah. What's interesting too is I find people get sucked into kind of what they're hearing. I mean, we're bombarded with information all over the place. And I think the condo market and what's happening and how there's so much information, about it online, in the news. I think that's leading to that type of thought across the different segments as well. So not just condos, but townhomes, semis, detached homes. People are going in now with this attitude that we don't have to jump at this. We can negotiate. There's still one-offs. I mean, I was just in a multiple offer situation for a place in Acton, actually, to rent. We didn't end up getting it, but it was kind of out of the blue because right now you're going in thinking, my clients are pretty attractive as far as tenants go. Probably won't be in multiple, I don't think multiple offers with rents, especially now when prices are coming down a little bit, and we were blindsided a little bit. I was like, oh shit, we got to sharpen our pencil all of a sudden. It's very one-off, I would say, for the most part.
Exactly. And then like we were talking about before, you have to take those nuances into account. So right now, we're seeing this narrative of rents coming down, but what a lot of people are not focusing on are the segments where rents are actually going up. So me and you were just chatting about this before we started talking, but rents for condos of 3-bedroom or larger, so I'm thinking around 1,000 square feet plus, are actually going up. And the reason...
Use the term. Come on, use the term.
No. I'll get it.
I can't even remember what it was. What was
Silver
the term?
Tsunami.
Silver Tsunami.
Yeah.
That's it. I love that term.
I personally dealt with so many clients now that are downsizing. Their kids have moved out. Too much house for them. They rarely ever go to the second floor. We always say, hey, how long has it been since you've seen the second floor? And if it isn't in the last week or two, you should probably downsize. And those are the guys who are bidding, again, probably in multiple offer situations for those nicer 1,000 square foot condos that have good layouts. And that segment's actually moving up in price. So
I think that too, going back to supply and demand, they're more scarce, than the 1 or the 2-bedroom. But interesting you bring that up. I was having a conversation, it was about 6 months ago, with a gentleman in my neighborhood. He's getting a little bit older. I mean, he's got a large detached home, 4-bedroom. It's just him and his wife that live there. And he said that exact same thing. He said, we will be moving to a condo. They just haven't made the decision yet whether to rent or whether to buy. And of course, me right away, stage in my life, I was like, well, why would you rent when you can afford to buy? He says, I just don't want the headaches anymore. He's got the money, he's got the equity, pay it and not have to worry about it. It's somebody else's problem type of thing. I think that's a great point, especially segment specific. For sure.
Yeah.
What else? Come on, let's go.
With rents. Well, we already talked about investors. We talked about which segments are kind of seeing the largest drops we're seeing are in the 1 to 2-bedroom because there's so many out there. The other thing is that's what went into production a year or two ago. So the market's really lagging sometimes. Like back when the demand in 2020, it was insane for those 1-bedrooms because all these young professionals were kind of flocking to those careers. But then when they all moved out during COVID and that kind of brought in some extra nuance to it. Now we have so many in production due to that demand, but that demand isn't there anymore. So,
and I think that's a great point to bring up as well when you're talking to somebody who's not as familiar with investment markets, especially for residential, as we are, to bring up that, pre-construction and things that aren't built yet, you have to be very, very careful for that reason that you just said. Like the 1 and 2-bedroom were very high in demand when there was a need for them. Okay, now you've got a ton, as opposed to resale where you can get somebody in there right away. I have a question for you, actually. I was just thinking as I was talking, I've run into a situation twice now with landlord clients. Okay, they have tenants that they're very, very happy with. Tenants have been there for one of them 2 years, one of them 3 years, and they have traditionally increased prices. Okay, year over year. They lease to them at market value. Okay, obviously we just finished saying rents are dropping. What advice are you giving, or what do you do as a landlord now? You've got these great tenants, probably over market value now. Do you get greedy and roll the dice, or do you say to them, hey, we're going to keep it the same, or do you adjust to market value?
I would personally wait for the tenants to come to me and say, hey, this rent seems a little bit higher than we're used to, or we've been hearing a lot of things in the market. And I think a lot of tenants are savvy nowadays, and they will want to have that conversation with landlords. The way I would tell a landlord to handle it at that point is, hey, listen, do they let you sleep at night? Like, do you have to worry about your tenants ever banging a wall or creating noise complaints? No? Well, then you should definitely consider dropping the rent if they're going to leave if you don't. Also, vacancy costs. If you kick them out, or if they leave because they don't want to pay the rent, first of all, are you even going to get the same rent when you find new tenants? And second, what if it sits vacant for a month? That 1 month of rent of vacancy is worth dropping the rent by $100 to $200 for that entire year.
Yeah, 100%.
So
if
that's
not more.
That's the conversation I would definitely have with the landlord.
So that's interesting you said that, because the two were very, very different. One of them, the tenant actually did come to him, and he said to me, he goes, "What do you think I should do?" And I said, "Are they a good tenant?" And he said, "Yes." I said, "Then hear him out." Okay. I this was just last week, so we haven't had the follow-up conversation yet, but I totally agree with you. And I think a lot of landlords forget the value of somebody who cares for the home like it's their own. Like I have a tenant in my property. It's a condo in Milton here. And for years, even now, well under market value. And people have commented, "Oh my gosh, you could get so much more of this." It's like it's her own. I mean, she's been in that unit since it was a pre-con that I bought. But there's huge value in that, I mean, that's definitely something to consider.
Yeah. Like even if you have a great tenant, but they do so much as to maybe nick the walls here or there, or
but you're living in a house, you could do that.
Yeah. So like even if you have a great tenant who does that, you're still looking at like $1,000 to get that thing painted if you're getting a new tenant. So if you have a tenant who's amazing, they've never so much made a mark on the wall, like there's literal tangible financial value in that.
Absolutely.
Because you don't have to do all this extra maintenance that you do for a tenant that might be paying you $100 extra per month. But how much does it cost you in maintenance over the next couple of years? And
that's a perfect on-ramp to the next point I was thinking about with this. Challenge again for the landlords who haven't, or the investors who haven't thought this process all the way through, is with rent rates going down, maintenance costs and cost to carry your unit are definitely not going down. Your utility costs are going up if you're not in a situation where the tenant is paying for these. Trades costs, maintenance costs, everything is going up. So it's again, to use your term, this perfect storm that's creating more of a margin gap for people who get into investments.
And property taxes. Everything are definitely going up.
Oh God, don't get me going.
Those are one of the bigger.
We took a huge hit this year. For my property, and it's crazy. So if you're running super lean, you're going to run into challenges for sure.
So another implication of all of this is now we're getting more supply on the sales side as well because of all these reasons, right? Investors who can't afford to hold these properties because of rising costs, lower rents. And that's just, it's kind of making the problem worse in terms of listings coming on the market. Because now we're still at all-time high listings, and I feel like it's just hitting all-time high every single month. And this whole rents decreasing thing obviously has an effect on the sale and listing side as well.
Yes, totally agree. On the flip side, what I'd like to propose too, though, is what a phenomenal time if you are an investor and you do have your shit together. And you do have kind of a master plan and you've got money to invest where you can make these things cash flow positive and hedge against what could potentially happen. I mean, I think there is a floor here somewhere. I don't think we're going to see a rental market collapse, if we can call it that, because it did get stupid 3 or 4 years ago with how high rents were going. But what a great time for somebody looking to purchase an investment property.
Because the best cash flowing properties are, I want to say, an hour, 2 hours out of the GTA anyway. Those are the properties that are taking the largest percentage hits right now. Because when things get cheaper in the GTA, you buy in the GTA. You don't typically flock out. So if you're an investor who's savvy, you know what rent you can charge. Like if you go to a university town like Windsor, you can easily rent out to students there, have a stable kind of income, but you're taking advantage of prices coming down in the market right now. So if you got the capital you're savvy or you have a trusted advisor, definitely a time to take advantage, like you said.
And you said, going, an hour out. It's what's amazing to me. I've got a client who has an investment property. It's a triplex in Cambridge. We just rented 2 of the 3 units.
Mm-hmm.
It's amazing. Even 40 minutes out, rent rates aren't that different.
Mm-hmm.
So you're getting kind of that high return on rent that you would in a Milton or a Mississauga at, less. You're having to pay less to buy it, but you're still gonna, benefit from that return on rent.
Exactly, and I'm sure there's a sweet spot.
Oh yeah, for sure.
With how many kilometers out you drive.
Mm-hmm.
But you're right. Like in university towns, I can attest to it because I used to live out in Waterloo, and rents were just as high as they are here for just like people working and professionals as students. So.
I'm going to bring up a Milton Menace reference again. Somebody we sit with when we go to the games. She's got 2 kids that go to university. Okay. One Guelph and one Mac, I think it is.
Mm-hmm.
And we were just talking about rental and what they pay. So I guess they charge per door. Okay. Investors, in university towns.
Yeah, exactly.
$800 a door.
And how many are in the unit?
6.
Wow. So $4,800?
$4,800.
Probably easily. Is it a condo?
No, it's a small little detached home, like similar to what you'd see in like Old Milton.
But easily covering the mortgage.
Oh my gosh. And people are paying for the bedroom because the rest is shared space.
Yeah.
I think she was saying the one that they found, they were all excited because there was actually 2 washers and dryers. Okay. But 1 kitchen. I think they had 2 bathrooms for 6 people or 8 people, whatever it was. Yeah. So, I mean, if you're savvy, if you spend a little time looking and plan your strategy out, it's a great time.
It's amazing to cash flow. It's incredible. Especially, so the other thing is mortgage rates are also coming down.
I was literally just going to say that.
Yeah, I could tell you're thinking about that.
100% I was thinking about that. Yeah. And what's amazing to me is, like talking to my parents, for example, 18, 19, 20% when they got into rates, and we still hear people all the time talking about how high rates are. And is it really that high? Like what's prime now? 275 or something?
I think 250 or 250. Yeah, 250 after the drop. Yeah.
So, mortgages now you're able to get, Ariel and I were talking last week, I think it was, under 4%.
3.85. I personally know someone who got 3.85.
For a 3-year or 5-year?
3-year.
That's awesome.
Yeah,
3 years seems to be the sweet spot right now.
Yeah, because there's a bit of uncertainty there for sure right now.
But oh my gosh.
Yeah.
How nice is that? Especially if, you find a property that's going to return you 8 or 9%. It's 5 points.
Oh yeah.
That's a nice little buffer for sure.
Yeah. And like we mentioned, since property prices have come down too, if you are savvy, you get the right place, you get the right tenants in there, you're also getting the capital appreciation in 5 years.
Absolutely.
Real estate typically does this.
Yeah.
Sure, we've been doing this for a little while, but it's just a little while. It usually is like the time in any market for the downtrend is usually shorter than the roaring uptrend that comes later on.
I just had this conversation with a client talking about getting into investments, and I had read something, what we've seen in real estate over the last 5 to 7 years is a huge anomaly, with that spike in prices. I can't remember if it's banks or the Bank of Canada, when they project out, and if you look at the last, I think it's 40 years, the chart that I looked at, 3 to 4% appreciation per year. That's kind of the average that you should be working off of with real estate, and very, very consistent up until I think it was like 2008, 2009. Then it started to go all wonky. It dropped and then it came up again, and it's kind of finding its space again. But if you can find something that's appreciating, 3, 4, 5% a year, you're not going to lose on that. You just use the example of 5 years from now. That's 20 points in 5 years.
Right.
If you've got $1 million property, that's $200,000. That's not a bad return.
Yep, exactly. And then what people don't take into account with that average figure, I think, first of all, I think you're a little bit conservative. I think it's a little bit higher than that. But maybe yours is inflation adjusted or something. Because I've seen 5 to 6% per year over the last 30 to 40 years. Right. What people don't understand is if you buy on the 20% dip, you're getting more than the average coming 10, 15 years out of it. So market timing, I know people say don't try to time the market.
Insert investment banker comment.
Sorry.
Yeah. No, you're not wrong.
That's all I think about. Like, if I know timing the market is not generally advised, but it's not advised when you're missing out on opportunities because you're trying to time the market. But if you get in somewhere around the low, who cares if you got in a couple % early or a couple % late?
But we talk about this when we're trying to establish pricing strategies for residential products.
Mm-hmm.
I think if you adjust your strategy and your expectations, there's opportunities anytime, anytime, you know, anytime what the market's doing. You know, now what I love, there's so little competition. You know, you look at a condo now, I mean, you could probably negotiate 5, 10, 15%.
Easily.
At a minimum. At a minimum.
Mm-hmm.
As opposed to, you know, when everybody jumps back in, it's mass scramble, you know, to pay. So, yeah.
And it's like any market. So when I'm heavily interested in the stock market, I'm always watching it. It's the exact same thing in the real estate market. It's the exact same thing in the rental market. You get this exacerbated move up like we did in 22 or with rents probably a year or two ago. After that, you're inevitably going to get a bit of a decline, right? And then you get a little bit of sideways action. And that sideways action is when you want to start taking advantage. Because that's when, like you said, there's not that much competition. People are in the state of uncertainty. And when people are uncertain, that's when you take advantage. So with rents coming down right now, I think we have a little bit of ways to go with rents coming down. But it's not a bad time to start getting involved as an investor, right?
Oh my gosh, yeah. I mean, especially now, while you do have your pick of the litter, essentially. I mean, it's funny where my head went when you were just talking about to remove it from investing or money. You know, what comes up must come down. And when it comes down, it rolls on the ground. You know, so I mean, when you're rolling, that's the time to jump on it.
Yeah,
for
exactly.
Sure. Anything else? Key takeaway. What do you think?
Key takeaways from today. If you're a landlord, make sure, or even before you become a landlord, make sure you know what kind of market you're in. Make sure you're aware of the trends. And when you budget, don't budget for the best possible scenario. You want to budget for the worst case doomsday scenario. Rents fall another 10%. And that way, when you do go into investing, you'll be happy with your returns rather than doom and gloom because you already expected the worst.
I'm almost identical. I mean, what you just described is what I think of as a sensitivity analysis. So you want to run a whole range or a whole spectrum of numbers. What's the extreme? Oh shit, I can't believe I'm here. And oh my God, I'm so happy I did this. And everything in between. Okay, that's really important. That's number one. Well, that's number two, actually. I would say cash is king. Understand your cash. Know your numbers. I've said this 100 times on social media. Know your numbers before you get into anything like this. And I think there's opportunity for sure.
And if you're a current tenant or you're a tenant looking to get involved, great time to, you know, negotiate on rents. This is the first time I've seen in a while that you go to a landlord and say, are you open to negotiate? And they'll say yes, right off the bat. I've done this in the last 6 or 7 tenants I represented. All the landlords were amenable to that.
You ask before you start to negotiate? Well, you're
a
way nicer person than me.
Say, hey, are you open to negotiate? And then if they say yes, you can negotiate a little bit harder now than what you would have initially, if you know what I mean.
If they get mad, well, you wanted to negotiate.
Exactly, right? And it's just like and this is for my tenants to know what I'm doing behind the scenes. It's just like a way to kind of gauge their reaction right away.
Sure.
If they say, you know, we'll think about it, then you know there's a little bit of wiggle room. But if they say yes right off the bat, you know there's a lot of wiggle room there. So yeah, tenants, great time to get your own place if you're trying to move out of your parents' place. Rents are coming down. And current tenants, you know, bring that conversation up with your landlord if you feel like you're paying way too much.
It's funny, the meme that popped into my head, you see it all the time. So you're telling me there's a chance. You're telling me there's a chance. I mean, that said too, with tenants and looking for a place, keep your expectations realistic. You know, like if you keep your expectations realistic, I think it gives you the best chance and opportunity because something's been sitting for 45, 50 days doesn't mean they're going to jump at you if you're a weak tenant. I mean, control what you can control, have your shit together. And there's opportunities for tenants, for landlords, for investors. It's actually a good time right now. I think it's pretty positive.
Yeah, exactly.
Cool.
Yeah.
Thanks, man.
Those were all my tips. Yeah, that was great. We should do this again.
Dude, stop stealing my stuff. I was going to say that exactly.
Yeah, no, I'm sure all the numbers guys, just like us, will really enjoy this podcast. So yeah.
Cool, man. Thanks.
All right, man. Thanks so much for listening to our discussion about dropping rents. I hope you got a few tidbits of good information, and we'll see you next time. Thanks for listening.